Morning all, how are we doing? Good morning, everybody. Well, where's the chat gone? That's gone mad. Morning, Christian, Ian, Steve, Danny, JC, Peter, Baggy, Joe, Evil, Gregors, Virginia, Henley. Morning, Yotko. How are we all doing? Happy Thursday. Pinch punch, first of the month, no returns. 1st of February, you can't pinch and punch me because I did it first. So yeah, FOMC yesterday, big one. So we'll have a look at that and dissect that in a minute. Oh, go away. I'm going to buy you, silly epic pen. Morning, Grateful Buster. Morning, Monkey. Late night from Cali. Blimey. We'll start off quickly with the news for the day. So today is non-farm payroll day. No, it's not. It's not non-farm payroll day. It's Thursday. Shut up. Today is Bank of England rates. So obviously we had FOMC yesterday. As expected, we got the 5.5, no change. We'll look through that, but the upshot of it is that the interest rate drop will probably be slightly later than anticipated. Or more confirmed it will be later than March, unless the unemployment rate rises a lot, in which case then they will put it down faster. So unemployment has become the main driver for interest rate change. So basically they said yesterday, as long as we're getting down to that target on inflation, which it looks like we are, we'll put the interest rates down in May, possibly in April, certainly not in March. Unless the unemployment goes up dramatically, then March might be brought forward to the date. So somewhere between March and May, thank you, we get a change. So no change next month, possibly March if unemployment starts to rise. So this is going to be quite a critical figure. The market will be watching this tomorrow. If it jumps up, they will be dropping the US. If it doesn't jump up or it jumps down, possibly slightly bullish, but we'll see. So we'll have a look through that and dissect it all in a minute. But today we've got ECB Lagarde speaking at 8 o'clock in 5 minutes at the open. That's going to affect the DAX. We've got the Euro CPI flash estimates coming out at 10 o'clock. They're going to be negative. Because the German was, positive because the German was. It's highly unlikely they'll be very negative. They might be a little bit down, but more likely to be as expected or bullish. Won't really do a lot. OPEC meetings today may affect the Canadian dollar. 12 o'clock's the big one, Bank of England rate. So we've got the rate expected to be 5.25, same as the US. Very, 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 very tiny chance of any change there at all. It is swaying towards wanting to put that down. Bailey has now been scheduled for press conference at 12:30. Wasn't going to, is now. Might be a big one. So we'll wait and see. But Bailey speaking at 12:30. So this is exactly the same as with FOMC. We get the rate and everyone goes, yep, fantastic. Wait for the press conference. The press conference is where you get the movement. So you'll notice the movement yesterday happened about 8:10 when the press conference finished. Boom. Yeah. Same with this. We will get the rate. We will get the monetary policy statement. That will give us an indication of why they've done what they've done. But this is where we find out what they're planning. So that's the important part. So somewhere between 12.45 to 1.15, the pound could potentially move. Unless they come out with something ridiculous here, then it, could do. Following that, 1.30, we've got unemployment claims. And then we've got PMIs at 3. So it's a very busy day news-wise again today. We've got 3 minutes to the open. So we will go through all of this. So overnight-wise, haven't had a chance because I've only got back from the gym recently. I was just going to quickly see if there's any overnight news. Building. Qualcomm. No. So going back to FOMC. Is there. So we'll have a look at that in a minute. So good month last month, 40%. Although I am running 3 strategies now. So yeah, very, very good month last month. So reset this month, 0. Back to square 1. Morning, Johannes. Morning, Alan Bay, Antonios, Amy, Themba. Morning. So nothing really banked overnight. Did 1.12 yesterday on H1M5. ADR reversals did 193 yesterday. I closed out the rest of the pound yen today. So I had my target set for these very last two positions. I had them set in propulsion, which basically is an ever such a tiny loss. So basically it's a break even, but that's the swap I had to pay. So it's a break even exit. So very nice profit on that one, and that one. And then these two are break even with a tiny loss. So I'm out of everything. I've turned the EA back on this morning. I had the EA turned off yesterday because I didn't want to take any trades off the back of those big moves that we had yesterday before FOMC. It was a bit too risky. I haven't had a look at them. We'll have a look at them in a minute, see how they played out. So the only thing I've got left is EuroCAD, pretty much flat. And hedging 1.53 banks yesterday. Got some bits and bobs to bank, but nothing's really getting anywhere on the hedging at the moment. It's just up and down. So, meh. Right. DAX. So DAX is probably going to be tricky today again, and possibly FTSE because we've got the news coming up at 12. We might have a quiet open today. We have just rejected that low pre-market though. So probably looking at a bullish day today. The FTSE had a big down day yesterday. So this is kind of where we were looking to come down to the day before if we were going to break short, but we didn't. So we'll see where we go today. Still very tricky, these indices, but just got to kind of push through them at the moment. See where we go. See if we get a break. So break long on the FTSE. Nice quick break on the FTSE. 1 hour straight away. I'm going to do a little bit of work on, when I've got the other EA finished, I'm going to do a little bit of work on SIH. I want to put an automatic re-hedge feature in, which will use another targeting system. I'm going to test it first to see if it's actually worth having. But I want to try an automatic re-hedge system working on 2 hours, because while I've been watching this price action unfolding, the market does hit ADR every now and again, but it's not that often it hits ADR. Much beyond. We do get very close to ADR or hit ADR, but we don't usually go particularly far beyond it. It's very rare. So I'm playing with the idea of exactly the same strategy, doing the same thing, but with the hedges, using smaller targets. So having the ability in the EA to, instead of just automatically jumping to 5R, having the ability to jump maybe to 2R to start with, and then try that, because I've been noticing an awful lot of days where we just get these 2R moves or 3R moves. So trying to get the 2R and reversal, and if that doesn't work, re-hedge and go for another 2R. So we go 4R. 4R will be roughly ADR. So if we get to those ADR levels and then we pull back from those, which we do quite often, you'll have a second exit, but you'll be in 2 hedges. So it's just a strategy I'm thinking of. Somebody gave me the idea of it. There's someone in Telegram who contacted me who's been using 1R. There, out, done, right? And having very, very good results, better results than I've had, but then I'm not using it on full auto. So, but using that 1R target for the first point, 2R target for the second point. If we get hedged, we use the 2R target. But then I said, well, what if it jumps to ADR? And he's like, well, I re-hedge it and then I try and manage it at ADR. We can automate that. So I'm going to add some extra functionality into the into a development version just to test the theory, which will allow it to be used much more on auto. Because you won't necessarily have to target highs and lows as much if you're using tighter targets, because if it's on its way to a high or a low, probability is that target will be before we get there. So But anyway, it's something we're going to play with. But I want to get my other EA done first. So there's a prime example. Look, he's out. I'm not. Yeah, but he's also got a break even on his second half. But at the end of the day, he's got money, isn't he? So anyway, theory. Morning, Astro. No, morning. Morning, Sarah. Morning from Pontevedra, Blue Trader. How are we doing? Sunny, good for you. Going to get hedged on the FTSE. Hedged on the FTSE. Leaving that target in place. So basically, if we're going to break down today, we've already tried to go down pre-market. So if we break the pre-market low today here, there's absolutely nothing to stop us in this propulsion gap until we get to that accumulation. So ADR, perfect target to the downside. Upside target, propulsion at ADR. Perfect. I'll have that. So that's the hedge on the FTSE. DAX hasn't even managed to move yet. Virtually an inside bar on the DAX. Has slightly wicked out the downside. So depending what your offset is, you may have got caught into that one, but not moving yet. So there's your 5-minute opening range on the FTSE. And there's your 5-minute opening range on the DAX. So your 5-minute ORB today on the DAX is pretty similar to the 5-minute pre-market candle. That's your 15-minute pre-market range. No movement. We got Lagarde speaking, so let's just have a quick look and just see if she's saying anything. I'll come back to the Fed later in a minute. Nothing. Where is she? Saudi Arabian Monetary Authorities workshop as part of a panel. So she's not going to get quizzed about anything to do with actual ECB rates there, I doubt. So I don't think we're going to get much movement off of this for Euro. But the DAX is hanging about this morning, so we'll come back to that in a minute. So there's your 5-minute opening range in. So if you're taking the 5-minute ORB, it's pretty much the same trade. Short on the DAX, on the FTSE. So we'll come back to those in a minute. So ADR, Aussie dollar, yen. We have got some ADRs to look at today, and there's a couple of RSIs as well. So we'll have a look at those in a sec. So I just wanted to pick apart this FOMC before we have a look at the rest of the stuff. Morning, Chucks. Morning, it's time. The performance of the 3 strategies is really impressive. Well done. Cool. Watched your video? Yes. Do you like my video? My new video? I'm very proud of my new video because I put special effects in it. Because as you know, I'm not a video editor, but I got these little like text. Piss off. These little text messages come up. Didn't it? Took me ages to do that. 211 views already in 14 hours. That's not bad. Not good, but not bad. Oh, forgotten. Thumbs, people. If you've forgotten this morning, I haven't checked yet, but 83 people in here. Don't be a bum. Smack that thumb. So yeah, FOMC. So obviously the interest rate was expected at 5.5. That is what we've got. So the Fed does not expect it will be. This is the meeting minutes, not the press conference at the moment. So the Fed does not expect it will be appropriate to reduce rates until there is greater confidence inflation is moving sustainably towards the 2%. Morning, Neo. So where we are at the moment with the US, we're on 5.5. We've been frozen for many months now, and we're looking for a 2% target. So the inflation change we had last quarter is 0.3. So it ticked up, and inflation comes down very much like market structure and a trend like this. It doesn't come down in a straight line every month. So what they're saying is we want to get a little bit closer to that 2%, and we want to see this go back negative. So that's the first thing. So there's two things we need to tick off to get this interest rate down by 1/4 to 0.5%. That is also undecided at the moment, more likely 1/4. We need this ticking back towards 2% faster, and we need this to come down. So that's the first thing. The second thing we need is unemployment, which is stuck at 3.7 at the moment and not going up, to stay at 3.7 or to come down. If that happens, second tick, that makes that happen faster. So these figures obviously are the key drivers, always have been, which is why we monitor them for interest rate change. So at the moment, that one is going the wrong way. That one is good. So this is what the Fed is basically saying. We want to see this come down again, and we want to see it come down decent. So ideally, I want to see CPI drop for a couple of months to give us the confidence that, yes, we're definitely going there. I.e., if that one drops down to a 0 in February, and then in March we see CPI drop again, that will drop us below the 3%, and they'll be like, yeah, we're pretty much on our way there. And oh my God, because we've got this thing so high, that's going up. We need to get it down. So it's the same old stuff that we're used to, but the Fed has basically come out yesterday and just confirmed that we're not interested really at the moment. We're not interested in March because this is February we're in now, don't forget. We'd like to see more evidence of this getting closer, which is what they've been saying all along, but they've actually come out and now said not March, more likely May. So they pair earlier gains to the market, basically pairing earlier gains, blah, blah, blah. Futures traders keep bets Fed's first rate cuts to come in March. Again, that will change later. Rate cut in March versus May now priced at even odds based on rate futures. Previously, March had been seen as more likely. So basically what they're saying here is we were expecting March. Now it's pretty much 50-50 as to whether we're going to get March or May, i.e. not going to March, skipping April, and now we're going to May. So we're dropping back 2 months, which is more bullish US, because obviously interest rate drops will be bearish US, but more neutral rather than bullish, because it's only delayed by a couple of months, but it's still coming down. So you're still looking at a drop in the US. It's just it might happen a bit later, which means that we're probably going to get, as we've had during November, December, and January, a load of that, which is all right for ADR reversals, but for any other style of mean reversion trading, quite tricky. So the policy went into restricted territory. So this is Powell now starting to speak. Our policy rate is likely at its peak, i.e. we're not going up anymore. We know that. We've been stuck there for months. They will be reducing rates some point this year. We know that. Everything's going as expected. This is usual stuff they come out with. So we have very strong growth last year. We don't think necessarily need to see a weaker growth for inflation to come down. So they're talking about GDP growth. GDP basically for the US is negative 1.6. So it was coming down quite a lot, but it's still 3.3. It's still massive. Look at the growth of the US compared to the rest of the world. We've got Japan in a shrinking economy, the pound in a shrinking economy. We've got Canada shrinking. Aussie's just about where it should be. The Swiss is just about there, but the US flying. So they're not worried about basically the economy, which is good because they don't have to focus on that. It doesn't go into the equation. So it just makes it easier for them to change their rates. It seems likely we'll achieve confidence inflation, i.e. get closer to that 2% target. Everyone in the committee believes it will be appropriate to reduce rates. So this is a little bit like these numbers we get published for the pound. This is people that want to increase rates, keep rates the same, and reduce rates. Yeah. So it's basically a 0.009 is what he's saying if it was equivalent to the UK. So everybody wants it down. We're not looking to slide on. We are not looking for a slide in unemployment, but would cut rates if we saw a weakening. So this is what I was just talking about. If that unemployment rate goes up and then it goes up again, that is a slide in unemployment. That means they would be interested in reducing rates faster. So we really need to keep an eye on that unemployment figure. If that comes out as a plus today, probably going to be big negative move on the US, because this is basically what they're saying is it's all about unemployment now, because we know interest rates increase unemployment. We've been increasing them for 18 months and we've kept them where they are for months now, and it looks like unemployment is stable. But if that changes, we'll need to drop them. Yeah. That was about it for everything else, I think. Oh yeah, if inflation moves back up, we'll be surprised at this point. So they're expecting the inflation drop to carry on going. We are not looking for inflation to tap 2% once. We are looking for it to settle at 2%. That's the same as everybody else. I don't think we will have a rate cut in March. There we go. So that's Powell basically saying, based on today's meeting, I don't think it's likely we're going to cut in March. Yeah. So right now, unless February's figures are massively different to what we've got now, we're not moving in March. We'll be moving later. Could still be April, but more likely May. So there we go. So that's basically the upshot of it. And it's just a case of really waiting for data, which we know we've always been waiting for data. Blimey, look at this, DAX. Inside bar. We're now trying to go long again on the FTSE. So if you've taken the 5-minute ORB today, you're short. And there's still no trade on the DAX. So if you look at the FOMC move yesterday, New Zealand dollar yen ADR, we'll look at all these ADRs in a minute. So let's look at Euro US. So this is the news yesterday. That was the rate announcement. As I said yesterday, and it's pretty much the same every month. It's a whipsaw, because if you don't get an unexpected result, there's no reason to move the market. So they just use it to take all the liquidity. Then after the rate announcement, we get the press conference, which is this candle here. The press conference decides the direction. So the market was bullish US dollar, because they were saying, we're not going to drop the rates. So if you're not going to drop the rates, we're either neutral or bullish. Those are the only two things you can do. If we're not going to drop the rates down, you're saying we're going to do it later. So that's bullish. So everything obviously dropped against the US dollar. But if you look at the actual movement for the entire day there, we're 92 pips, 74 ADR. We really didn't move much, did we? We got an ADR, maybe 125. And that was partly because of the rally before. So nice, just A-shaped recovery. No movement, no direction. But this morning, we'll need to sort of keep an eye on what happens with the US to see whether or not that is going to be sustained, whether they are going to remain bullish on it. So at the moment, obviously, you can see there's not an awful lot of movement. So there's nothing much moving on the US dollar. It's all Aussie based, because obviously we just come out the Asian session. So there you go. So upshot, give it another couple of months, basically, is all they're saying. But definitely we are going to drop rates. So again, we know this. There's nothing new came out of yesterday, apart from the fact now we know it's probably unlikely to be March. Therefore, we need to be slightly more bullish on the US. However, if unemployment rate now is the focus, we need to keep a very close eye on tomorrow's unemployment rate figure. So everyone focuses on this. They call it non-farm payroll. Non-farm payroll is not what moves the market. The unemployment rate is what moves the market. This is the thing that makes it move, not that. But we call it non-farm employment. It's just not. It's the unemployment rate. So that's the key. They are forecasting that to tick up. So again, if we get a 3.7 tomorrow, not a 3.8, that US is going to go. It's going to be bullish. So we need to pay attention to that one tomorrow. So we'll look at the ADRs. Just need to look at my pound yen. Got a bit more profit on that. Obviously, we got the pound rate today. So I'm hedged on the pound. I've got long exposure and short exposure at the moment. So I don't really care what they do with the pound today. I win, which is fine. But I think based on what we know at the moment, we're going to get a freeze could be bullish, I think, on the pound today. So, but that strong US dollar is going to help the yen as well. So, tricky one. But I'm just keeping an eye on it because I want to start banking some. I want to get out of this, basically. I just want out of this pound yen now. It's just been a long time. Right. ADRs. Long on the DAX. Not really convincingly, though. So ADRs today. We've got a weekly range hit already, look. 2 weekly range hits on the Aussie yen and the Aussie New Zealand. ADR on Euro odd. Australian dollar's going mental. So not quite sure why that is. Import-export prices rise. Affect it much, but anyway. So yeah, big moves on the Australian dollar. This morning, Aussie dollar CAD. I'll catch up on the chat in a minute. Aussie dollar CAD, ADR hit to the downside. So big drop on the Australian dollar there. So this is all Aussie dollar. Aussie dollar falling out of bed really hard today for some reason. Euro odd will be pumping through the roof. And pound odd also. So not quite sure why this just got weak Aussie dollar overnight. So these are all potential mean reversion opportunities. We're getting very extended there as well. So all of these, obviously, we've pushed down beyond ADR. So you can drop down M5. Aussie dollar yen's the biggest at the moment. So drop down M5, wait for the reversal alerts, and just obviously getting on the pullbacks on these. But it's really coming down quite hard at the moment. There you go. Aussie dollar Swiss has just hit ADR as well. So, not sure why. Just a drop in the Aussie, basically. So all ADR reversal opportunities. Aussie dollar yen I'll be getting into when we get a reversal on that one, because that's hit 125 ADR, and that's the level I'm using. So all of these are Aussie based, every single one of those, apart from the New Zealand dollar yen, and obviously the New Zealand dollar moves with the Australian dollar. So we might find that we get some of these New Zealand dollar ADRs hit as well. That one's getting close. We're on 34 out of 38 for New Zealand Swiss, 41 out of 53, 49 out of 50. So New Zealand US is about to alert any second. There we go. We're just about to hit ADR on that as well. So watch all of these Aussies, all of these New Zealands for bounce plays today. Watch for the reversal alerts. Jump in, third of an ADR, quarter of an ADR, half an ADR, whatever you want to get out of it, basically. So they're all good extensions. Aussie dollar yen, we're on Thursday, but Aussie dollar yen has hit its weekly range. So that's Monday. So that is your weekly range hit, Aussie dollar yen. So massive move, look, on this. That's got to be so we were on 150 ADR approaching here today. That move there was a good ADR and a half. So it's a three ADR move in basically in 24 hours on this Australian dollar yen. So that entire move there has had no profit take whatsoever. So looking for shallow to medium pullback on that. That's a beautiful propulsion gap there. Look, straight through support. This is a beautiful gap at target. So looking for a push back up to retest that resistance and then come back down. So that would be your ultimate target on it. But obviously, depending on how much profit you've got by the time you get up into that one, you might consider taking some or all off there. But wait for a reversal Aussie yen. So that is a weekly range hit already. I say already, it is Thursday, but that's an opportunity for a nice long. And you've got Aussie New Zealand also. So I got out of my Aussie New Zealand. Must be this account. Yesterday. So I got out of Aussie New Zealand there as we pushed down yesterday. That's the final part of that position, had multiple exits on it. So, yeah, should have held that, but who'd have known? So yeah, good push down on that one. Again, same thing. There's your weekly range done. Look for a pullback. Very orderly on the way down this one, though. So you've only got this propulsion move out of this accumulation there, which they may well add back in. If they do get above that area, you're looking to come out somewhere around there as your downside support turned resistance. So we've already used that as support resistance. Yeah, we hit it, hit it, hit it, hit it, hit it, broke it, hit it, hit it. Off we go. So again, they're selling through that level and they're re-adding to their positions from that level. So when we get back there, you're going to have limit orders triggering to go short. So that looks like a good level. So that's nicely extended as well. ADRs, sorry, RSIs. Just watch what's going on with this. 1 hour on the DAX. 5 hours is going to be unachievable. We'll see if we can get a 2 hour on this. The upside. It's not particularly fast today, is it? But we got this low here potentially, which we may get stuck at. So see if we can get through this level. If we can, there's a good chance of pushing back up into that accumulation, which is obviously this propulsion gap where the buyers added back in and then got run over on the news. So RSIs, there's a couple to look at. Aussie dollar CAD, that's nicely extended. That's also an ADR hit, obviously. So we just got extended there. So if this pushes down any further today and we get sort of down into the 125, 150 range, I'll be taking a long on that one because that'll get me in. And Aussie dollar yen, we're obviously extended beyond the 175, beyond the 25 level now. So I'll be getting in long on this one as well, which gives me hedge exposure on the yen because I'm actually long on it at the moment. We've had radio silence from the yen for a while now, so I can do about that really, but I will take a long on that because it is very, very, very extended. So I'll be getting into this one on M5 when we get a reversal alert. So that'll be my entry there at the moment. Unless we push up, pull down, then I'll get a tighter entry, but we'll see. We'll see where we go. But that's going to be a nice little entry long. That's also extended on your 4 hour. So if you're trading 4 hour H4 M5 or H4 M15, you've got your extension there. So we're looking for a pullback. Then obviously it goes whichever way it wants to. Tricky this yen at the moment, very tricky. They can't make up their mind when they're going to go which way they're going with their interest rates or when. So we'll have to wait. Aussie New Zealand 4 hour, very big extension, beautiful support bounce coming up off of the 3 week low, which is here. That propulsion gap again. So nice. We're pretty much at ADR. That entire leg has had no profit take on it. So very nice extension. Again, looking for just a pullback to get out. So drop down again, M5, wait for your reversal alert, or M15. M15, you're just about to get one, very tight. M5, pretty much the same level. So we are bottoming out down here. So that'd be your entry. Target on that if you're trading the 4 hour. You've got to be a bit careful with this one because we sat and accumulated for the whole day yesterday after breaking that level. We've been ages trying to break this level. We finally broke it, retested it, and dropped. So we may well just start adding in to that short. And obviously if you do, then you just need to scale in. But so that is 4 hour RSI extension, only just extended. It is going to trigger a 25 as well, so that is going to get more extended. Euro yen is extended on the 4 hour, dropping down nicely. All these yens and the pound yen. So long opportunities on these, but I'd rather be going that way, which I am. So we'll see. But again, no radio silence from the Japanese. God, look at next week's news. Compared to this week's news, there's hardly anything happening. We've got PMI for the US. We got the Aussie rate, New Zealand unemployment, and CAD unemployment rate. So sparse next week, isn't it? Important news, but sparse. Right. DAX holding those highs at the moment. FTSE at 2R. So we're just approaching previous day's low on the DAX, on the FTSE, which is what we rejected yesterday. So watch this area for limits. Okay, so that's those covered. That's everything today. Let's catch up on the chats. Evans, morning. Smacked. Good. Good smacking. Anybody that's got in here? There's 94 in here now, so there's another 10 people added since I last put this up. Don't be a bum. Smack that thumb, which means press the like button in a John Wick way. Does the EA for the ADR reversal take the trade when the order block on the M5 also closes over lower on the 100 level, or just take the next regardless? So the EA uses market reversal alerts. It is the market reversal alert EA. Yeah, so it only trades when there's a market reversal alert. One of those. Yeah. And it will trade at whatever level you set it to. So if you use 100% of ADR, when it goes above that level, next reversal alert, it will take it. If you set it at 125, it will wait till it's done that, and then it will get in. So it all depends what level you set. But it will not trade without a reversal alert. That's the whole point. If the thing just keeps going up like that, we don't get in. We wait for breaking market structure. Tell us that the guys that we want on our side have just started to sell in this case. It's all covered in the video on the website about the EA. It explains in detail how it works. There's a manual that explains in detail how it works. If you want to know how the market reversal alerts indicator works, which the EA is based on, go and watch the market reversal alerts indicator videos. That explains the entire concept when it loads, which for some reason when I'm on stream, it just doesn't want to load. Okay. Half loaded. But that video there, what the market reversal alerts indicator and dashboard does, explains it. And then that video is all about the indicator installation and the settings for it, which explains obviously everything it does in more detail. Just watch everything. Every question you could ever ask will always be answered in a video. Stuck on the wrong side of both Aussie US and pound Aussie. This Aussie roller is weak. Yeah, I don't know what's going on with the Aussie at the minute. Just not happy, is it? Not happy. Somebody's upset the Australians. Probably tied their kangaroos down or something. Your 40% January was truly impressive. No disrespect intended. You managed 40%. What do you think the bank's profit was? I don't know. Who knows? Afternoon day trader. Banks don't make as much profit as that. Don't forget, this is 3 separate strategies on 3 separate accounts. Yeah. However, I'm trading smaller amounts of money than I was last year. So I've decided to split my capital across 3 separate accounts, 4 separate accounts, actually. So yes, it looks impressive, but the 9% I did on this account would have been twice as much last year because I had twice the capital. I've got half the capital in this account now. So yes, I still made 9%, which for me is a good month. If I can make 10% a month, which is what I say in the bootcamp, if you can make 0.5% a day, you can make 10% a month. If you can make 10% a month, you can double account in a year. Yeah. All you've got to do then is work out how much money do I need in my account to make a living. Very simple. Yeah. So 10% on a 100K account for me is 10 grand a month, minus the tax. 10 grand a month is 100 grand a year. 120 grand a year. I want to earn 6 figures. That's how you do it. However, this year I decided to split. So I'm running 50 on this, 30 on ADR, 15 on hedging, and then SIH has got its own allocation as well. So across the board, yeah, I mean, it is more percentage profit, but I'm using a lower capital. If I put I haven't got that much capital. If I put 100 grand into each of them, you wouldn't see me for dust. I haven't got it. Don't need it. The more money you trade with, the more pressure there is on you. The more pressure there is on you, the worse you trade. So I was trading with 200k at one point, and I found it incredibly difficult psychologically because every single tick was going ridiculous money. I was in $15,000 of drawdown, and although the percentage was absolutely fine, the money was a year's worth of mortgage payments, sort of thing. You know, it's like, it's not a comfortable, it's an individual thing. For me, it's uncomfortable. For some people, they'll be absolutely fine with it. And I think that's where people differ, isn't it? Some people are very happy to deal with massive risk like that. But for me, it's too much. And it affected me psychologically, so I stopped doing it. You don't need to earn it. You don't need that much capital. Well, maybe you do. I don't know. It depends what your mortgage is, doesn't it? Thanks for subscribing, Ninshan. Welcome aboard. Morning, Champagne Pappy. Morning, Astro. Already said that. Just to confirm, for subsequent positions, when price has moved against you, it doesn't use a reverse alert. Yes, it does. Guys, Thought Feeder, you've been in here a long time. There is never a trade ever taken on my account that is not a reversal alert, with me doing it manually or with the EA. Yeah. It's called the Market Reversal Alerts EA. It will trade when there is a market reversal alert. If there isn't one, it doesn't work. That is the signal indicator. The condition indicator is either RSI or ADR. So the EA goes, I've got no trades on. Let's wait for RSI or ADR to get extended. Condition met. Okay, condition is met. Now let's wait for the sellers, in this case, because we've gone up, to take control of the market in the form of a signal reversal alert. Get me in. Okay, now the EA goes, I have one trade on short. Oh, this isn't working. Price has pushed 3/4 of an ADR against me. It's not going to get in because price has pushed 3/4 of an ADR against me, because it's going up. I want the sellers on my side before I get in. So it goes, okay, we'll wait for a reversal alert. Oh, there's a reversal alert. Okay, is the distance between that trade and that trade higher than what the guys put in the EA? 0.75% in my case. Yes, take a trade. If no, don't take a trade. But it will never do anything unless there is a reversal alert, because it's the Market Reversal Alerts EA. That is the signal. There is no trade without a signal. The signal is a reversal alert. That's it. I can't believe people are asking this question after 2 years in here and all the manual and the video that I've created on this. That's how it always worked, ever, forever. That's my entire concept. I'm called the Market Structure Trader. That is the Market Reversal Alerts EA. That is the Market Reversal Alerts Indicator. My entire life revolves around that little orange block on the screen. If that isn't there, I'm not doing anything. That's it. That's me. If you just take a trade short because there's an alert or something, and then price moves up 3/4 on ADR, and you take another trade there, and price decides to just do this and move 200 ADR today, why on earth would you get short? Wait for the people on your side to come in. And if it happens to be that you get in there and the next trade is 2 ADR away because they bought for hell for leather for an entire day and no sellers were in the market, don't get in. Get in when the reversal's there. Yes, your average is going to be an ADR away, and it's going to be a lot more difficult to get out of it, but that's how it works. We don't get in unless there's a seller or a buyer, whatever. Either or. It's not 40% altogether, it's 40% in numbers, not 40% gain on capital. Yeah, it's 40% gain on capital. No, hang on. It's 40% gain on each account, on all accounts in total. It's all explained in the video. I made 9% here, I made 20% on the other one, and I made 10% on the other one or something, didn't I? I don't know. Watch the video. I can't remember. It's 38.7% I made last month. Astro, thanks to Lee, I've achieved 10% return for January. Good man. 10%, that's exactly. Well, you did better than me. I did 9.9 or something, didn't I? Yeah. Is the market reverse EA your best performing EA? Yes. Sam, seriously, before you do anything, go and read this handbook and watch 25 hours worth of content in this handbook. Yeah, I'll put a link in there. The fact that you're asking that question means you don't know how to trade. So watch that first before you even look at an EA. Yeah. No such thing as a best performing EA. You're the trader. The EA is just a tool. You trade. EA just takes trades. Okay, thanks. Just beginning with the market reversal at EA, for some reason, thought in the bootcamp you said additional positions don't use market reversals. As in, it's not a chunk of money. It's 40% total gain on capital because, you know, there's donuts that are going to go, oh, great, I can double an account in 2 months. Yes. You can double an account in 2 months, but don't expect to double it again the next month. Expect to lose it. Yes. Yes, I made 10%, but I made 20%. You know, this is the thing. You're going to have months. I went through this yesterday in the live room. I went through all my statements for last year. And there's months where I make 25% a month. And you're like, Jesus, if I could do that for 4 months in a row, I can double my account. I don't do that, do I? I have 1 or 2 months a year, which are 2025s. I have the vast majority of my months somewhere between 5 to 10%. And then I have losing months, which are roughly 5 to 10% losing months. I have a couple of those a year. And I have a couple of extraordinary months. And then I have a couple of, the rest of it is mediocre months. But that's trading. That's how it goes. Like I said yesterday, we spent quite a lot of time talking about this yesterday. You don't pay yourself. The market pays you. When the market moves in your direction, you get paid. You have to wait for the market to move in your direction. The market decides when you get paid. Last month, with ADR reversals, the market decided to pay me handsomely. This month, with market reversal, with ADR reversals, the market might decide it doesn't want to pay me. It wants to take some of my money away from me. But I have no control over that. The market does it. I have a certain amount of control. Aussie dollar yen in. I have a certain amount of control. But you know, it's down to the market movement at the end of the day. So there's a reversal alert. Aussie yen in first position at 150 ADR roughly. So just going to target that propulsion gap, the pullback. So looking for a sort of 38 retracement on that leg. See how that pans out. I think it'd be better if it was EA, AE, not EA, automatic entry. Some people think all EAs are place and forget. They are place and forget. You know, you can. That's how they're sold. Most EAs are sold as set and forget, which is absolutely fine. But if you forget, when you come back, you'll have no account left because most EAs are curve fit cons, aren't they? So you learn that after you bought a few. But yeah, automatic entry would be more sensible, but rather than expert advisor. I've never understood why MQL5 came up with the term expert advisor, because it's not an expert advisor in any way, shape or form. It's an automated trading tool. Why they came up with the name expert advisor, I've no idea. It doesn't make any sense, does it? I mean, it doesn't advise you, and it isn't an expert. It's programmed by you or by someone else. If that person is an idiot, it's an idiot advisor, isn't it? If you know, it's programming is this. There's a term in programming called GIGO: garbage in, garbage out. If you program something crap, you're going to get crap returned. If you've got a crap trader programming a crap robot, it's certainly not an expert advisor, is it? Why would you call it an expert advisor? It doesn't make any sense. It doesn't advise you, and it isn't an expert. It's just one of those weird terms that they came up with, which has stuck. EAs. That's probably why we call them EAs, because they're not expert advisors. We just call them EAs because they're not what they say on the tin, are they? They're not. It's nothing to do with advice. I class myself as an expert, but I'm not. My product doesn't advise you. It just takes trades based on what I do. It's a dumb instrument. My EA is stupid. It's dumb. Yeah. It just does what it's told. Yeah. And if you set no profit target on it and you said get in and then scale in until the market moves my way, and you didn't set a target, it would just go, all right, I'll keep going. And it would sit there like with enough money to pay your mortgage for the next 3 years. And it would let it all go because it's dumb, because it hasn't been told to take the money and put it in your bank. It's stupid. It's not an expert in any shape or form. It's a dumb instrument that just presses buttons for you because you can't be asked, which is why I built it, because I can't be asked to do this all day long. I want somebody to do it for me. DAX is rallying, FTSE's rallying. So we're 3R on the FTSE now. So looking for this propulsion target retest at ADR. So just retest this accumulation. So you've got to be careful with this today. Very careful. 12 o'clock today, the rates are announced, and this thing's going to go full turbo. So obviously, UK, the FTSE is the pound. So it's the inverse to the pound. So if the pound rallies like crazy, this thing's coming down. If it drops like mad, it's going up. So you kind of want to be out of this if you can by lunchtime, by 12 o'clock. Or if if I'm still in this hedge, the announcement, I shall be putting these TPs 200 ADR, because this thing's going to potentially look at yesterday's US look. So that's what you're going to get when the news is announced. Yeah. So it doesn't look like much, but if you measure it, ADR is 65. That's 42. So imagine the FTSE doing a 3/4 of an ADR move from there. You're going to be up at 175 ADR or back down at 125 ADR potentially, aren't you? So just bear in mind that's the kind of range of movement you could easily see on the FTSE, depending on what happens with the news. You know, we don't know what's going to happen with the news, but just be careful. It'd be lovely if that can get to that propulsion gap and hit ADR ahead of the news, and then can try and get out of an aggressive on it. DAX is 1.5 bar still, so as long as that's pushing, we might get some movement on the DAX. Look at this New Zealand dollar coming down as well. So we're down at the weekly and monthly low. So this is the January low. We're just retesting now. Swiss franc seems to be powering up as well, a little bit. So we've got some power coming into the Swissy. Euro probably powering up as well. Not so much. So this is just the Swiss franc. So there's money coming into the Swiss franc. So that's the Swedish Swiss risk bank rate at 4. Don't usually look at the krona, do we? Another ADR just come in there. New Zealand dollar Swiss. There's your ADR hit on the New Zealand Swiss as well. So loads of ADRs today. Busy day. Champagne Pappy. An EA is a non-human. We know that. It is a specifically designed software application that assesses the trading conditions and executes trades on behalf of the trader. It helps traders understand the opportunity. Where are you reading this from? It helps traders understand the opportunities and risk involved in each trade and enable them to make an informed decision. Google. That's not right, is it? It doesn't assess the trading conditions and executes trades on behalf. Yeah, so it does assess the trading conditions and execute trades on behalf of the trader. It helps traders understand opportunities and risks involved in each trade. No, it doesn't. It takes trades. It doesn't say to the trader, I've just gone short. Now, if this goes up, there's a possibility you could lose $15. If it goes down, we can get out at some point in the future. There's my EA voice. That's how the EAs talk. My EAs talk very differently, but that's how normally they work. On Google, yeah, I don't know. That's probably the factory definition, but it's not right, is it? At all. Google. Little bit of rejection at the weekly levels on FTSE. Not particularly screaming away today, are we? So before the news today, at 12 o'clock, I will be closing all pound profits. So anything that I have in profit on the pound across any account will be shut. So this one here, for example, it's not a lot of money, but it will be going down there, because same with all news events, big news events, if you've got profit, you can take it now. If the news goes against you, that turns into a negative and everything else gets deeper into drawdown. So you can't get that money back. You can lose it. So that will be going down there. Anything above kind of 0.15% or more, just stick it in the bank. Worst case scenario is all of these other positions turn into profit if it goes your way, and you bank all of those, and you've already banked that. If it goes the opposite way, you do not go into drawdown on that position, and it does not add to your drawdown. Yeah. So it's worth just banking it. If you've got stuff that's at break even as well, it's not unknown for me to close break even positions. So if I've got like 5 or 6 positions on something, 5 or 6 trades on a position, and I've got something at break even, I'd much rather that didn't go into drawdown. Obviously, if it goes into drawdown, excellent, I'm better off. If it goes my way, yes, that would have turned into profit, but these are all going to turn into profit as well. So it's the greed factor. Yeah. Yes, if the pound drops, I could make a lot more money on that. But it's a 50-50 shot. If you're a gambler, leave it on. But don't come moaning when that turns into a negative $250, and you'll be going, oh, I wish I'd have taken that 114. Then I'd have $250 less dollars of drawdown to worry about. Yeah, so just be careful. So anything pound related, euro might get a move as well. So again, you can make the decision. So whenever we looked at US, like yesterday with FOMC, anything Canadian or US, I banked before the news. With the euro will move off the pound news, and the pound will move off the euro news as well. We're close trade partners. Their economies affect our economies. Their interest rates affect our interest rates. So, well, they affect our interest rates, but they affect what we pay with our transactions with the euro. So you will get a little bit of movement. So if you want to bank euro, if you've got anything euro as well, you can do. New Zealand US ADR as well. This New Zealand dollar, not happy. Australia and New Zealand, very upset today. Good mean reversion opportunities though. So there's only that one there. There's nothing there to bank. I need to go through this account and put some TPs in, because this is hedging. So I'm a little bit new to this hedging. Well, not new to it. I've been running it for a year. But when I'm actually looking at it, obviously I need to set TPs on these things. And when you've got a long and a short on, you need to make sure you've got long and short TPs because you want to get out at support resistance levels. So obviously with this one at the moment, TP's all the way up there. There's the average. So I can't really do much about that one. So that's actually fine. I'm hoping that we can get some bullish price action and then make a new low so I can get a reversal alert down here somewhere so that we can pull this average down a bit. But this is the problem with hedging, and this is why it gets into such big drawdown, because we're playing hourly reversal alerts. So in fact, we're kind of trading on the daily charts here, taking hourly reversal alerts. So it's a much longer swing. Euro odd. So my buy TP is there. I'll be getting out the buy positions there, which is that one and that one. So if we can get a 125 on the euro odd today, I should be getting out of that. I've got a short on down there. Short target down at that propulsion. Euro US dollar. First short on that one. Look for an ADR on that. If we can just get a 1 in, 1 out, that'd be lovely. Euro US, pound CAD, long only, TP's up there, that's fine. Pound New Zealand, on buy, TP up at propulsion, that's fine. Pound US. So the pound US, I've got longs and shorts on at the moment. So I've got 2 longs on targeting these highs. So this propulsion gap here that we basically, this is an old propulsion gap that we sold out of, came back up, put in a lower high. So I'm targeting that lower high, which is 175 ADR to the upside. The short position, I need to put TP on down there. So targeting the monthly low. CAD. Buy target all the way up there. We've got 2 buys on that and 1 sell. So looking to get out of the sell position down there. It's that one there. And then we'll add in to the buy. Swiss. That's got a 1 buy, 1 sell. Not enough profit on that at the moment. So target's down there basically. So with this one, obviously, I'm just looking for a move. So it's too early to take that trade off. Not enough profit on it. So I'm looking for that to break and then come and retest this area down here. Failing that, we're going to be looking to test down there. So getting in out of the short there, we've got a long on there. So basically, I'll be looking to scale in on the long, move the average down and get out somewhere in propulsion when that drops. So upside target at the moment, put up in that propulsion gap. US dollar Swiss. Long only at the moment. Targeting that high. And US dollar yen. What's going on? Why is the indicator broken? Weird. Up in there. So US dollar yen, got 2 longs on. So target to the upside on that. I can probably do that. So we're going for that propulsion gap. It's long only. So basically with the hedging strategy, what I'm doing is, if it's a long only position, we haven't had a hedge, a short position taken, i.e. this one, that was the reverse alert short. I took it off down there. We got the second long entry on. So basically, if it's one direction only, I'm just targeting as normal. So look for a propulsion gap that gets us out of both positions and then wait for it to reset. If there's a hedge on, I'm looking at support resistance levels or propulsion gaps, which are a decent distance away, that we should get another reversal alert in the other direction on the opposite trade. So like with that one there, with that New Zealand dollar CAD, there's a long and a short on that. You see where the averages are. That's the short position, and the average on the long position is there. So this short, if we get down to there, I can take that short off. By the time we get down to here, we'll be looking to get a reversal alert to get our third buy position on. We've got a buy there, we've got a buy there, probably a bit deeper than that actually, but and then we'll be getting out the buy when the price comes back up. But you see the length of time these hedges take to play out, because we're trading hourly reversal alerts. If you think of it from a multi-time frame analysis perspective, you're actually looking at, you're really trading daily charts. You're trading the hourly swings within the day. So these trades take a long time to play out. Therefore, they get into quite a lot of drawdown. So, but equally, they generate quite a lot of profit because you're constantly banking, because you've always got a trade in the going the right way. So you're building this up all the time. And as we saw last year, produced 148% profit in 9 months, didn't it? So good strategy, but I'm finding it mentally very difficult to trade it because I'm used to trading low time frames and getting in and out faster on swings. Whereas this thing, I've got to adapt to being in these things for weeks, which might become very costly as well. We will see. As much as we give certain others a ribbing, do you think it'd be possible AI will be quite useful for EA decision making? I've no idea. AI, if AI develops as we think AI is going to develop, it's just going to be another human being, but very intelligent. So yeah, AI will probably be quite a good trader. However, I wouldn't put my trust in AI trading for me. It's just like me putting my trust in someone else trading for me. I wouldn't do that. I don't know you from Adam. So what makes you a good trader, Mr. AI? I want to interview him. Yeah. What's your strategy? Well, I adapt to strategies because I monitor market conditions and yeah, but what's your strategy? Why are you getting in? When you're getting out, what makes your decisions getting out? Yeah, I need to interview the person. If I was going to have anybody managing my money, I want to know how long you've been trading. What's your experience? What's your strategy? What's your returns? What's going on? Yeah. If you build an EA that works using AI, you've got a dumb instrument being run by a dumb instrument. I don't know. I'd need to see the mechanics of what it's doing. And if I agree with the mechanics of what it's doing, yeah. But I don't know. It's like Tesla, yeah? Yeah, let it drive your car for you. But don't blame me if you're one of the people that it drives into a bridge at 100 miles an hour and kills you in a ball of flames, because it has done. Yeah, that's an AI driving a car. It's really, really good 99% of the time, but sometimes it really buggers it up. If I've got 100 grand on the line, I'm not taking that risk. I want to make a decision myself. Yeah, it's going to go long here, for example. And it's going to go, I've made a profit, I'm going to get out. And I'll be like, well, why would you get out there? If it's going up, it's much more likely it's going to test that propulsion and this support. Well, I'm getting out because I've got profit. Why? Because I've got profit. Yeah, but why? Yeah, we know it does this. You don't, because you're an AI. I'm not convinced. Everybody's jumping on the bandwagon, obviously, because they want to sell you something. Like Greg Secker's using AI to sell his courses now. Bollocks. Total bollocks, a lot of it. Just, you know, all these AI EAs coming out. They're not AI. They're not driven by AI. I know how the marketplace works. I know they can't be driven by AI because you'd need a DLL to drive it, and they don't allow it. So anything that's got the word AI in the marketplace is bollocks, because it can't be. If you're buying a third-party EA through someone else and not through the marketplace, yes. I don't know. It's got its uses. It's got a lot of uses, and it's going to be very useful. I've written a load of stuff with AI help. Brilliant. But I let it write it, and then I read it and I correct it because it's an AI. It's its interpretation. It's not my interpretation. So I don't know. I'm not sure. I really need some pound weakness on 3.5% drawdown on the pound US because I tried to close it off. Well, it's certainly giving that at the moment. That US dollar news yesterday will have helped you. That was more bullish than bearish. How can you be in 3.5% drawdown on this? Even if you got in somewhere down here, you got out there. If you get in on that, you're out. If you got in on that, you probably scaled in and out. How can you be in drawdown on that? Should be out. Oh, pound odd. Sorry. Okay, yeah, fine. Yeah, pound odd. Probably in there. That one I get. Yeah, pound weakness. Yeah, the Australian dollar weakness isn't helping you at all. Yeah, I totally agree. Hopefully that will help today. We'll see. We'll have to wait. If I had increased the offset distance for pending orders on the SAH, then I would have possibly avoided getting into a short on the DAX today. Is that correct? I don't know. You tell me. How would I know that? So if you got triggered on a short, yeah? So I didn't get triggered on a short because it didn't get to my price because my offset is that far. So if your offset is that far, yes, you would have got triggered. If your offset is that far, you definitely weren't triggered. It's going to be dependent on your broker, your spread, what price they quote you, how far it goes, the distance of the offset. There's too many variables. But yeah, obviously, I mean, it's one of those questions that has an obvious answer. If you got into a short on that and you didn't want it, if you'd had a different offset, yes, no, you wouldn't have been in, would you? It's a dumb thing. It placed the order there because you told it to place the order there. If price moved down to that, it triggered you. If it didn't, you didn't. Yeah. But then what you'll do, Dougal, is tomorrow you'll use an offset down here. Yeah. And what will happen is you'll get a clean break and it will trigger your order there. And you'd wish you'd put it there because your target would have been closer. And what will happen is tomorrow you'll have your offset there and it will break down. And instead of your target being there, it will be there. And what will happen is it will come down to there and it will bounce. And you'll be going, oh, crap, if I'd have an offset closer, I'd have actually TP'd on that. Yeah, do you get it? There is no setting that is correct. Every single day, this thing does something different. Every single day, there is always a setting that's better than the one you have. You cannot determine what that setting is because you cannot see into the future. You get in, you wait, you deal with the trade. There is no way of getting a system or strategy fine-tuned to any market, any time frame, any condition, because unless you can see the future, you can't set it. Pick one, stick with it, trade it, accept the outcome, deal with what happens afterwards, because this is the only way you can set an EA up every day to do the right thing. Because you have to be able to determine what the future market movement is going to be able to put the orders in the place that they should be. Can't do it. It's impossible unless you have a time machine. And if you do, I will buy it from you. Brian, you're not in here. Remind me this afternoon to get Brian to make me a John Wick in a time machine with AI. That's what we need. We need a John Wick in a time machine. AI must be good as Greg Secker's developed it. Yeah. Greg. I bet he's developed an AI to do his eye makeup for him. At present, AI is just a better text predictor like you have on your phone. Yeah, I mean, AI does an awful lot of stuff which is useful for small things, like all with the Google thing, Google Pixel, where the AI, and we have it in Photoshop now. I use Photoshop quite a lot, and there's lots of AI integration into Photoshop now. Great, you're active again. I'm not. See? Stupid. My watch thinks I am active. I'm sitting on my ass. AI. Yeah, it's not that good, is it? But it's Photoshop's got AI in it now, so it will automatically. I'll go, I want to cut that person out, and it will go, all right, I'll have a look at that. That don't look right. That don't look right, and it'll keep going, and it'll go, what about that? And I'll be like, yeah, that's fun. Well done. It's useful for stuff like that. But making financial decisions for your future, driving your car, flying your planes, not sure. You know, there's certain things it can and can't do. You've got to program safeguards into stuff, yeah? And the whole purpose of AI is you remove those safeguards. Yeah, it's like the old iRobot, isn't it? It's got the 3 laws where it will not harm a human being, it will not cause by action harm a human being, blah, 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 blah. Somebody's programmed those in, which restricts it. Got to have that restriction in place, which means that it can't be completely free. I don't know how it will affect trading. We'll find out. Someone will probably program some kind of AI, proper AI trading mechanism as such. But it's got to be aware of so many things, isn't it? It's got to be aware of fundamentals. It's got to be aware of news. It's got to be aware of support resistance. It's got to be aware of what the futures market positioning is. It's got so many things to think about. And how does it make a decision? At the end of the day, whatever AI does, it's still got the same problem, isn't it? It can't predict the future. So when it presses the button based on a strategy that's got an 80% strike rate in the past, that doesn't mean it's going to work. It's still 50-50. Yeah. I don't see how it can help. It can help you develop strategies and things like that. Back testing, edge creation, that sort of stuff. But actually executing, I'm not sure. I don't know. I'm not looking into it. I've got something, it works, and I'm using it. So he loves his new AI trading software. What, Greg? I haven't even seen it. I haven't looked. I use HI, human intelligence. Exactly, Amy. The best, I've said it in here many times before, the best indicator on the planet is stuck in your head. Yeah. Oh my God, that's spiked up. I've got 2.5 grand in profit. It's nowhere near my target. Close. Good indicator. Yeah, it's 2.5 grand. That's your mortgage paid. But it could have got there. The AI is going, we haven't hit target yet. We haven't hit target yet. 2.5 grand of drawdown. It can't make that decision. You have to. This is why I teach in the bootcamp, isn't it? Yeah. Drawdown control and aggressive drawdown control is actioned by you when you are uncomfortable. I cannot tell you your comfortable level because I don't know it. You know it. I'm comfortable here. I'm comfortable here. Other people will be crapping their pants here. I'm not. Yeah. If you're crapping your pants here, do aggressive drawdown control. I'm not. I'm going to wait. Yeah. This is human. You can't teach somebody a level. You can advise and say, why don't you maybe pick 3%? When something gets to 3%, then do aggressive drawdown control. Or you could say, why don't you, when it gets to 6 positions, do aggressive drawdown control? Yeah. It's just an idea. It's a number picked out of nowhere. Is it right or wrong? I've no idea because I can't see into the future either. That's the sort of stuff that human intelligence can do. You can't replace that. It doesn't make, it can't make these decisions. It can make these decisions, but it can't have any better chance of making the decisions than you because the odds are always 50-50, aren't they? In my opinion, I can do manage your account, but it has to learn to make decisions. Yeah. It's a child. Somebody likened it. There was some guy on the news the other day. It was a couple of months ago, actually. And he said, he was an ex-Google engineer, and he said, what we have created is a 4-year-old child with an IQ off the scale. So we've got a 4-year-old child who doesn't understand what it needs to do, but it's got the intelligence of every person that's won the Nobel Prize, every scientist, the most intelligent thing on the planet, but it's a child. How do you teach this child to use this without going, I've got plans for a nuclear bomb. Wonder what happens if I throw it. Children learn by making mistakes. I'm a Tesla. Crash it into a bridge. Won't do that again. But what have you got to do to learn? Mistakes. What do you do as a trader to learn? Mistakes. You put this 4-year-old child in charge of your account. It's going to go, that blows an account if I do that. I won't do that again. Yeah, I know it blows an account. I've been doing this for 15 years. Why did you do that? Well, because I didn't know that would happen. No, thanks. Not yet. Anyway, it's constantly learning, which is great. So when it's got 3 years worth of trading history and proof, I'm interested. 125 ADR Aussie dollar CAD. I'll be taking that one today as well. So we just hit 125 ADR. So this account will be taking the Aussie CAD long on the next reversal alert. At the moment it's very tight, so nice tight entry on that one. So Aussie dollar CAD will be getting that today. If they're selling AI robots, they should be selling them cheaply, as they would not supposedly need to support or update them. It would stay well clear. Yeah, there's the thing. It's all too new. It's the same as everything. When something new comes out, there's a rush for it. And then you realize it's like electric cars in the UK at the moment. We've got this thing, virtually everything is electric now. I've got electric car. I've had electric cars for years. And we haven't got the infrastructure there. And they're just about to start rolling out properly the infrastructure. Now we're getting so many coming through. And then everyone's turning, BMW have just turned around and gone, we've just cracked hydrogen. We think we're probably going to start moving over to hydrogen. It's like, Jesus Christ, we just got electric. Yeah. It's all new. Everyone wants it. Let's buy it. Let's buy it. Let's buy it. No, it's not the right thing to do. That's what I feel with AI at the moment. Yeah, it's really exciting, but let's give it a bit of time to figure out what its uses are. And it's not trading, as far as I'm concerned, at the minute. But everyone's going to jump on the bandwagon and try and sell you something to do with it. Put the word AI in it, you want it. Put the word electric in it, you want it. Yeah. The iPhone 9 comes out. It's got a bigger camera. You want it. Why? It's got a bigger camera. So what? It's 16 megapixels instead of 14 megapixels. But 14 megapixels is way more detailed than I'm ever going to need. I'm not going to need to blow it up on the side of a wall. But yeah, come on, buy my £1,500 phone because it's got a 9 on it, not an 8. No. I don't do that. Every time you buy anything, though, isn't it? Like a graphics card, I bought a top of the range graphics card when I bought my PC. 2 weeks later, they released a new one. Like, very, very nice video, sir. Thank you. It's not a video, it's live. You did this the other day. You're a bot. See, this is AI. This guy, Dilavar, prove to me you're not an AI bot. Because you came in here the other day and said, very, very nice video, sir. Not a video, it's a live stream. And I told you this, I remember telling you this last time. So unless you type something in the chat now and prove to me that you're a human being, you're a bot, you're AI, you're stupid, because AI's come in here and told me it's a video. It doesn't even know this is a live stream. He's going to turn around and go, no, I am human. And I'm going to feel really bad. Yeah, FTSE approaching 5R. So we're up at ADR. It's a very difficult exit on the FTSE today. So obviously this entire thing here is a propulsion move, but it hasn't broken any low. So this good propulsion gap is an accumulation drop. That's a bank move. This is a bank move from previous resistance. So this is just a quadruple 5-tuplet top, whatever it is. So these propulsion gaps aren't necessarily going to find resistance. So it's a bit of a difficult exit. but it is ADR. So we are ADR already on the FTSE. This looks to me like we're anticipating a drop in the pound today. Because obviously the FTSE is rallying hard. So I wouldn't be surprised if the market is factoring in negative pound news. Obviously against the Australian dollar, everything's going to rally at the moment. And everything's coming down against the Swiss. So it's a bit difficult to actually pick a pair that you can compare and see what the actual pound strength is. But yeah, target, that is also... No, that is just 5 hour. No. There we go. I'm going to close it out. It's ADR. So I'm going to close it out there. And obviously, I'm going to close one position. There we go. So sell stops are in. So going to trail. The trail until we get some bear action. Look at the bear candles today. Look. We haven't actually broken a low yet. Look. So we've got a low, 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 low. That was the only bearish break we've had today. Low, 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 low. So this is going to be pretty safe from a trailing entry perspective because we've only had one break all day. The next break down is likely going to be exhaustion. So we've got a good chance of exits on this today, I think. See where we go. DAX is stuck. See, he hasn't come on, has he? Delavar, come on. Prove you're not a bot. AI being a genius doesn't help it trade the markets. You don't need to be a genius to be profitable. Yeah, exactly. And this is what I've said in here before, AZ, many, many times. You can read every book under the sun on trading. I've read every book by Al Brooks, by loads and loads of very good traders. Yeah, it makes me an expert in what they teach. It doesn't make me a good trader. Yeah, I've read everything about candlestick patterns and about price action under the sun for 15 years. I'm an expert in price action. I can say that hand on heart. No one's going to turn around and tell me something I don't know about price action. Doesn't make me good at reading price action and being able to trade, though. Yeah, you can give my 16-year-old, 15-year-old son a book, every book under the sun. He can read everything and I can quiz him on it. And he can get 100% in the exam about price action. You stick him in front of a chart, doesn't make him profitable. AI is very much like that. It knows absolutely everything, but it's never done it. It will learn by doing. It will know the theory, but which theory do you imply? Yeah, at a double bottom, for example. Price action at a double bottom tells you to go long. Which theory? There are many ways to trade. Where do you put a stop loss? Do you use a stop loss? Are you going to scale into that? The decision on how to use the price action at a point in time is the human part that I don't think you can just replicate. You've got to have somebody learning this bit. This is the bit you've got to learn, isn't it? Yeah. Doesn't matter how good you are at a subject. It doesn't make you good at doing. Yeah. Pilots make mistakes. Surgeons make mistakes. They're experts in their field. They still get things wrong. I make stupid trading mistakes. You know, it just happens, doesn't it? Apologize if you already viewed gold. Can you share your ADR levels on gold? No, just haven't got it. Don't trade it. Not looking at it. Sorry, don't trade gold. Still use iPhone 7 Plus. Good one. So does my wife, I think. I think she's got the 7. It's a phone. She uses it to text, take photos. The camera's brilliant, and it's a phone. Or I could spend 1,500 quid on a new one. No point, is there? I'm the sort of person with technology. When it breaks, I repair it, or I replace it. If it doesn't break, I mean, I've had the, what have I got? Samsung Galaxy, I don't know, Samsung Galaxy 5 years ago I've got. It still rings. I can text on it. I can play games on it. I'll tell you what, that's the one thing I do. When I get to a point where my phone can no longer play the update of a game, that's when I tend to replace my product. Or the battery dies. It's usually the battery die. They're reversing Aussie US. Stalling out, definitely. We are at ADR, so we will start to struggle to go further. So reversals there. See, not yet. We're not. AZ thought you, although you have genius traders like Michael Berry, if we had their genius, we'd probably get more percent a year. I've never heard of Michael Berry. Can't be that genius of a trader. I've never heard of him. Been doing this for 15 years. That's one name I've never come across. Mind you, no one's heard of me, have they? There's 71 people in it. I'm not a genius. I'm just good at what I do. A lot of other people are as well. Yeah, there's a lot of people out there doing this. You know, it's just some people decide to do it publicly, some don't. If you don't do it publicly, I've never heard of them. Subprime Mortgage, The Big Short. Oh, that guy. Yeah. Okay. I don't know his name, but in The Big Short. He's not really a trader, was he? I suppose he was. Yeah. More of an investor. Investors are the ones that make all the big money. So why don't you use the market reversal alerts EA on indices for scalping? So indices basically tend to be more, well, usually, not at the moment, but they tend to be more trendy. So the strategies that I don't use a stop loss. Yeah, so I don't scalp in the traditional sense intraday. So I position trade on multi-time frame analysis. So with indices, they tend to trend most of the time. So they're not good for position trading. And that's how I use the market reversal at EA. But you could use it if you want to for a scalping strategy. Nothing wrong with that. Just not how I trade. So test it. Stick it in the back tester, see if there's an edge. Just about to get triggered on the aggressive entry on the FTSE. DAX is stuck fast today at the moment. So it'd be very nice if we can get that pullback in by 12 o'clock today. And then the DAX, obviously, we're 1.5 hours into session in the next candle. So in theory, today, so far, we have either found the high or the low of the day by 1:30. By 1.5 hours in, rather. So either that is going to be higher day and we're going to pull back from it, or that's higher day and we are going to rally. Or we're just going to sit around and do nothing, which is quite possibly more likely because of, obviously, the news. So obviously, bear in mind, that's 12 o'clock. We're only 2.5 hours away from that. So the market is going to start to contract as we get close to the news because they're going to want to wait and sit. So really want to pull back on this leg before in the next couple of hours to get out. But I haven't actually got into the short yet. So let's see. Right. So that's all I've got for you today. For this morning anyway. So I will be getting into Aussie CAD and Aussie Yen on ADR reversals. In fact, I'm already in Aussie Yen. So I'll be getting into Aussie CAD on the next reversal alert, which is looking like it's about to go in potentially in the next 2.5 minutes. So that'll be my long on entry. Target Aussie CAD. I'm just going to go in propulsion. That's only 3/4 of an ADR, yeah. So I'll take a target in propulsion, half of that propulsion gap there. See if I can get that to start with. Aussie dollar yen. targeting that propulsion there. So just looking for that small push up into their ADR reversals are a scalping or shorter term strategy. So in and out quick. We're playing intraday extension rather than long term swing. So I want to be in and out as fast as we can. So yeah, nothing banked so far today, apart from that little loss on the pound yen to get flat. And we'll see where we go. So pound, make sure you bank. It's up to you, but I would make sure you bank before the news in case it goes the wrong way. Yeah, I'll be back 2:20 this afternoon, and we will pick this apart. Obviously, you know what I'm doing in the FTSE. There you go. Aggressive exit, entry short. So we'll be looking to get out on a pullback on that one. DAX can't do anything with it. Stuck again. These indices at the moment are almost like I just want to stop trading indices at the minute until we get this interest rate change, because it just feels to me that at the moment, and it has done all of January, it's like pulling teeth. We're just not getting clean breaks at the moment. And if we do get clean breaks, they're not getting anywhere. Like this. This is a typical example of what we've seen on the DAX for the last sort of 7 days. It's just and then stop. Literally can't get any movement. So I don't want to stop, but I know these periods happen. I've back tested it to death. I know we get stagnation. This is what we're sitting in. We're sitting in a stagnation period at the moment. It's just frustrating to trade through, which is kind of why I'm looking at maybe adding an enhancement to this to try and get out with smaller targets and then re-hedge ourselves so these conditions are taken care of. And we can still then, if it does decide to take off in the end of for the latter part of the day, we can still re-hedge, re-exit, and get out again on another pullback. So just trying to deal with all these conditions, because we seem to be getting a lot of this at the moment, a lot more than I did in testing. In testing, we had 33% roughly clean breaks. Feels like the last 2 weeks we've had more like 5. It's been terrible, hasn't it? But you know, that's a lovely clean break. Well, it's not. That's a hedge, but that is a lovely clean break move. But we're just not getting it here, are we? It's coming. They're coming later in the day at the moment. So, nothing you can do. Market does what the market does. Right. I'll be back this afternoon, 2:20. Same time tomorrow morning, 7:50 for the Frankfurt session. Excellent show. Enjoy the fish and chips. Oh, not having fish and chips. Is this because I'm in the UK and you're not in the UK and you assume that it's our national dish? I'm not having fish and chips. What makes you think I'm having fish and chips? It's breakfast. Certainly not having fish and chips. So you just wanted me to say fish and chips, didn't you? Watch this at 12 o'clock. 12:30 is when it's really going to kick off. And then we've also got sandwiched in between unemployment claims. So I'll be back at 2:20. We'll have a look at the impact of all of this and get ready for PMIs on the US session. All right. So have a good morning. Anything you need, I'll be in Telegram. I'll be doing some more programming this morning, so I will be about. And I will see you in the next session. Have a good day.